Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has managed to recapture its bullish stride overnight after clearing the 77 handle and sustaining. The market is now lingering around the 77.45.90 supply zone after briefly challenging the downside in the last 12 hours. Initially, the focus has been on the US and China trade wars, but the tension has eased somewhat after China's president surprised the market with a neutral toned speech on the international trade while speaking at the Forum. The market is now somewhat taking the attention away from the trade wars and now looks to Trump with the Syria problems after the recent bombing of his chemical weapon. In light of the pattern, we could see one more test to the upside, but I still, as I mentioned, see the supply zone around 77.45.90. If we get a rejection from there, then we should see a decline back to 77.15, with the initial target still remaining down at 76.30.35. Overnight, the euro recovered further on the back of a weaker US dollar. Now, the dollar index has fallen to a low of this morning of around 89.26. This is concerning because if we don't get a rise in the next 12 hours for the US dollar, then we could see a turn lower and look towards that crucial level on the monthly chart that's seen at 88. Now, long as that level is intact, we overall keep to a bearish euro and also sterling and a bullish outlook for the US dollar index. As some of us may well know, the dollar index is measured against a basket of 6 major currencies and weighted to the euro at 57.6. Later today, we do have the CPI number for the US, which is forecasted at 0.0. The market will slowly digest the numbers that are coming after recently from the non-farm payroll. Now, at present, we have seen a mixed number from last week. So the market will probably take a slightly slower stance in giving any prediction of what the FOMC will be thinking at their next meeting in May 1st, 2nd. And as I mentioned, the euro is at the moment pressured in this level around 123.85 and her firmer resistance seen at 124.35.45 with the support now minor at 123.25 with the next support beneath at 122.65. The dollar yen recaptures the 107 handle, but not as bullish as it makes out to believe. If you look at the indicators, they are somewhat disagreeing with this price action. So if the market is long, I expect to see profit taken towards 107.70. And the risk is greater to the downside with 106.55.60 still holding at present. The sterling nudges higher overnight and now closer towards the resistance that comes in at 142.50.90 area. It is expected, like before, rejection from there and see a move back to the immediate support of 141.35. Later tonight, the UK construction output, manufacturing production and industrial production readings for February will be released. So the market will be paying us very much attention to those numbers and see what the outcome is. Overall, though, we are getting a little bit toppy from the RSI, so we could see a retreat soon. The gold is nudging higher, and of course, on the back of that is that there has been a mixture of geopolitical uncertainty coming out on the market. One of them, of course, is that Trump is still very concerned about Syria after the alleged chemical weapons attack has put a lot of opinions on the military table, and Trump said that we'll be letting you know pretty soon. So obviously they're still looking at that. In light of the current pattern, we could see a move towards 42 to 48, but toppy towards that region from where we got a rejection from 1348. I believe the market is not too far away from the top side of the range, purely for the fact is the technicals are quite flat. Therefore, we could see a pullback to 37 or to 33. Rounded off with oil, well, as you can see, the rebound from that uptrend that now holds at $62 a barrel looks back to the recent rejection area, $66 a barrel. As long as we maintain underneath there, then I'm quite comfortable to look for a turnaround to the downside. However, do note a break above 66 would give us further scope towards $72 a barrel and reassess from there. But that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.